All right, we now have our final presentation. We thought it would be useful to look at where some of the opportunities are. So I'm delighted to invite Rebecca Snow from Experian to have a look at where we're at with the East Midlands economy.
Excellent, thank you very much. I'm not used to speaking with a microphone other than karaoke bars, so I apologise in advance. I won't break out to any music, so don't worry there. I've been invited here to talk about the East Midlands economy and Experian's forecasts between 2014 and 2020. Before I dive into what we're expecting for the region, I think it's worth just taking a look at what we are expecting at the macroeconomic level. So the UK economy, in 2014, economic growth finally became entrenched with GDP growth of around 2.6%. Figures from the ONS suggest that in the last quarter of 2014, growth did slow to around 0.5% growth quarter-on-quarter. Expansion at that pace was in line with our expectations as construction growth eased and oil production fell. What has been reassuring is the consumer spending outlook. We've seen real incomes rising, up on a steady path in line with strengthening wage growth, low interest rates and low inflation. There has been some unease in the Eurozone area, which has meant net trade was neutral in 2014. It was an improvement on the drag to growth in 2013. As mentioned, the consumer spending outlook is quite positive. We've also had some positives coming from the corporate sector. In the last couple of quarters, the businesses have been running financial deficits, which is an improvement to the sustained surpluses over nearly 12 years. So there's definitely an appetite for investors, for investment, and it's becoming increasingly evident. What we are seeing is a strong economic performance of the UK economy since the recession and its aftermath. It's probably been stronger than expected a couple of years ago, but there are still obstacles to growth. We have weak banks, the government needs to address the debt burden, and so growth further out, up to 2020, is likely to be below long-term trend as they still work through some of these issues. And I've put some of the barriers to growth or risks to our outlook going forward. But essentially we are cautiously optimistic for the year ahead and the outlook is fairly good. Moving on to the East Midlands, just to put in terms of context of size, its share of GVA is over 5%, in terms of population and employment about 7%. When we take a look at the growth over the past few years, well, there's actually been some great headlines for the East Midlands, particularly during 2014. We've seen GVA growth keeping in line with the UK average, population and demographics have been supportive, and the kind of growth that the East Midlands has been producing has meant firms have been able to increase headcount significantly and brought the unemployment rate to below the UK average at the moment. So there's certainly been some good news coming from the East Midlands. The RBS Regional Growth Tracker throughout 2014 actually put the East Midlands towards the top of the rankings or near top of the rankings. So it's been reassuring on that basis, and I'm going to be taking a look at some of the sectors to understand what's been going on there. To give you some themes to our medium-term forecasts, it's worth taking a step back and thinking about how we produce regional and local forecasts. We take into account a number of factors. In the short term, it's the demand side drivers that really play a key role in determining regional growth. So that's like the macroeconomic context, the industries that are within the region, to name a few. And then longer term, it's the structural factors, so the demographics, activity rates, infrastructure. And we bring this all together to produce forecasts for the East Midlands economy. Starting with the key driver of medium-term outlook is population. Now, we're expecting the East Midlands to keep in line with positive UK assumptions. Growth is expected to be about 0.6% per year out to 2020, and working age population is meant to be at a similar rate, so dependency ratio should remain fairly similar. Moving on to employment, I mentioned before that there have been significant gains in employment over the past few years. We're expecting a moderation from those kind of bumpy years that we've seen in the past, but still quite healthy going forward, supported by positive demographics. In terms of GVA growth, well, the East Midlands outpaced the UK average last year. We're expecting trends to moderate in line with the UK average, and the East Midlands stands out against its counterparts, but slightly behind, or a step behind, London and the Greater South East. In terms of the sectors, some of the standout performance going forward we expect to be within business services, and this is mainly professional services and also construction, which I'll come on to a bit later. And finally, when we're thinking about East Midlands, it's worth taking a look at the local areas. And although no one city dominates activity within the region, it's really the main centres of Derby, Nottingham and Leicester that we expect to stand out against the rest and really shine on. So what does this mean in terms of growth? Well, if I overlay our outlook over the period where the funding is expected, we're seeing the East Midlands slightly behind the UK average, but the UK is skewed by the dominance of London and the Greater South East, and very much a steady growth profile going forward. To drill down now into the sectors, I was asked to take a look at some of the key sectors within the East Midlands. Oh, sorry, before that, I'm just going to say where the region lies within the rest of the UK. So the black bar is the regional average, the blue spot the fastest growing local authority, the red the slowest. So you can see, obviously, London and the South East dominate there, but East Midlands ahead of the rest of the bunch, and we're expecting a steady outlook. So its position within the UK is favourable. Now I am going to move on to the key sectors. I'm going to start with the biggest, which is business services. It's a very large and diverse sector, so it's worth taking a look through some of the subsectors within this area. So if we take professional and admin support services, now this is the biggest part of business services. Over the historic period, say from 97 onwards, it really has been the key driver of growth in the region. It accounts for around 2/3 of jobs. As I mentioned, the performance has been quite outstanding. It wasn't immune to the sharp downturn during the recession, but the revival has been healthy, particularly within admin and support services. And it will retain its title as one of the stronger growth parts of business services. Moving on, we have what we call the TMT sector, so the telecoms, media and technology sector. The telecoms sector had the strongest growth outlook over the history, and the outlook is very robust going forward. The technology sector has had quite a bumpy ride over the recovery period. We do expect this to steady and the recovery to firmly establish and it to be one of the key growth areas. A recent plus on that measure is the announcement from IBM to create 300 jobs here in Leicester. And then we have the media sector, which really has struggled over the past decade to find any form. We're expecting it to become on firmer ground from 2016 onwards, but it's a sector that is unlikely to produce such growth rates relative to its counterparts there. The finance and insurance sector. Well, insurance has been really the weak link within the business service sector. Its past growth has been unspectacular. Going forward, it was unlikely to produce anything significant. The financial service sector really has been obviously at the heart of the crisis. We've had 5 consecutive years of considerable contraction in the East Midlands. We are expecting a recovery to come through within this sector, but Deloitte have suggested that in 2015 the mergers and acquisitions activity will surpass that seen in last year. So further consolidations come through there with margins, an eye on margins and pressures from regulation could well delay the recovery for another year. And finally, the smaller parts of business services, we've got real estate and other private services. Other private services, the firms within the sector actually managed to continue to recruit during the downturn, and its resilience will continue. We're expecting quite a healthy outlook going forward, while real estate, along with some of the other sectors, had really got a volatile recovery phase, and we're expecting things to improve, but there's more challenges still ahead. Moving on, and then there's some risks to the outlook, so in terms of funding, access to lending, and any renewed financial distress coming from the Eurozone, which could rock the boat once again. If we move on to manufacturing, now manufacturing is obviously more important to the East Midlands and most other regions across the UK. And what we have here is the GBA performance. The blue line is the UK, red line is East Midlands. And the plummet in 2009 has been well documented. And in the region, the downturn was of a similar magnitude to the UK wide. But the rebound has had much more vigour in the East Midlands. And it's part of the story as to why the East Midlands has been doing so well of late. Again, manufacturing is a big sector, diverse sector. And the subsectors, it's worth taking a look at some of the subsectors here. So here I've identified the sectors that are more important to the East Midlands than elsewhere. So we have food and drink, textiles and clothing, non-metallic products and transport equipment. Now the two at the bottom have a star there, and that's because we're expecting these sectors to stand out in the East Midlands in terms of future growth. Not only do they stand out in the East Midlands, but they're actually expecting to outpace the national average as well. The food and drink and textiles and clothing, these sectors are still under intense pressure. The food and drink sector has been a casualty of the ongoing and enduring price wars with the UK supermarket giants, with slashing prices and squeezing margins. I know there is a lot of initiatives to try and help the sector in terms of the food enterprise zones. Lincolnshire, I think, have allocated funding to create 3 of these. But it's a challenging time ahead for these sectors. I'm also going to put some of the weaker growth sectors and some of the future growth areas that we've identified at Experian. The future growth sectors tend to be the ones that are in the medium to high tech sectors. Now there are a number of risks to the forecast, the Eurozone or the export market being at the forefront. There are weaknesses there, but we've had some good news over the past few months. We've had the quarterly national accounts coming from the European area that have exceeded expectations. We've had a significant quantitative easing, which should inject some life into these Eurozone economies. And on Friday, Greece agreed an extension to their rescue package, so that's settled some nerves and hopeful that that can steady the outlook. In the recent CBI SME trend survey, small businesses are expecting was slightly more optimistic about export conditions over the year ahead. And so there are some basis for this optimism. However, the Eurozone recovery has been dashed on a number of times over recent years. So many are waiting for more evidence to declare a shift in the cycle. But certainly there are some upside, maybe, risks to the export market. Another potential barrier to growth are skill shortages. Now, as mentioned, a lot of the future growth we're expecting to come from the medium and high tech sectors, and to sustain this growth, we would need a significant number of skilled workers. Initiatives are in place, such as the University of Nottingham have been awarded cash from the Growth Deal Fund to create a new centre for manufacturing, and we've got the Derby Manufacturing University Technical College, which opens in September, which is part of the Royal Navy scheme to address skills in engineering and technical skills. So there are measures in place, but there are certainly some risks out there to the growth outlook. If we move on to the retail sector, here we have a chart for the East Midlands. This is annual GBA growth. The blue bar is the wholesale sector, red the retail, and the periods here are 1997 to 2007, the recessionary period, and the outlook. What we see here, we see the big shift down in growth over the recessionary period. But what's quite reassuring here is that the East Midlands on both of these measures outpace the UK average. Its resilience has been, there's been some anecdotal evidence of its resilience, such as vacancy rates in some of the city centres coming down, some of the outlet areas have been seeing record sales. And going forward, with our healthy consumer spending outlook, we think that will really prop retail. These two sectors are actually relatively strong amongst all the sectors in the East Midlands economy. So there are some props to growth in terms of rising incomes, strengthening wages, and with the first rise in interest rates not due until the early months of next year, the significant impact on exposed households and on consumer demand probably won't arise until 2017 or even 2018. So there's certainly some room for growth. Also, we have the strong labour market outlook for the East Midlands, and essentially, although it overperformed during this period, we are expecting it to come more in line with the UK average. Risks still lurk, and we're always in this mode of pointing out the risks to the forecast. So the credit markets, interest rates rise faster than expected, although this risk has dissipated somewhat, and any dents to consumer confidence could impact on the growth outlook. Now, a sector that I haven't put a slide in for, but could have maybe warranted a slide, is the construction sector. Now, the sector did plunge in 2009. It's still about 15% short of its peak in terms of output and employment. But the outlook is very healthy. We're quite optimistic for the sector in the region, and there have been other forecasts from the Construction Industry Training Board that are expecting the East Midlands construction sector to deliver an extra 3,000 jobs a year. Likewise, the Construction Skills Network are expecting a similar amount. We're a touch below that, but still healthy. Similar to the manufacturing sector though, skill shortages is going to be a barrier to growth potential here. A significant number of skilled workers will need to be filling these jobs, so there's a risk to growth there. What I've outlined so far here are our baseline forecasts. Now, Experian can build and quantify future scenarios, so we take into account structural factors such as raising raising the skills of the residents, infrastructure developments, and the change in the demographic profile of areas. We can also incorporate changes in UK demand or the industrial composition. We've recently undertaken a number of projects across the UK looking at specific investments, and programmes, and taking a look at the positive multiplier effects and the negative displacement effects, and help clients understand what the impact of change may be and to test alternative interventions and policies. But in terms of our baseline scenario, this is what we have. If we drill down to the local areas, so below the East Midlands, this is our baseline view for the GBA growth between 2014 and 2020. Now the dark blue areas are the stronger, the light blue the weaker areas. As mentioned, no one city dominates the region, so they have a diverse base for growth. Now, so it's a bit dangerous with a big audience to put up some names, but I'm going to give it a go. Hope I don't offend anyone. So we have Derby topping the rankings in our outlook. We've also seen some other good news for Derby in terms of the large companies that are within the area. In the recent 2015 publication from the Centre for Cities, it actually was one of the top 10 for generating jobs, and in the RBS Growth Tracker, it was one of the top local areas. Nottingham, not far behind. Now, if I was presenting this internally at Experian, my Nottingham colleagues would probably be pushing for a switch in the rankings. And then we have some of the middle of the pack and some of the below average areas. If there's any local people here from Leicester wondering where you stand, we're between the top performers and the average, so that's where Leicester would be. I think that brings me to an end. So essentially the UK performance has been reassuring despite some headwinds. There are still risks out there, and with the election coming up, there's certainly some uncertainty, but we're generally quite optimistic for this year. Going forward, we're expecting slightly below trend growth out to 2020 as the aftermath of the recession and ongoing weakness in the Eurozone area hampers growth. For the East Midlands as a whole, growth at close to the UK average, a steady profile that we have. Among the sectors, it's really the parts of business services that should be fueling growth: transport and equipment, construction and wholesale and retail, which stand out. The major cities are where we feel growth will be most prolific within the East Midlands. And then obviously there are challenges ahead, not just within the East Midlands, but nationwide in terms of credit, access to credit, export markets, the general election, which could affect business and consumer confidence, and other items such as skill shortages. I think that does bring me to a close. I've put this in as my contact slide for myself and my colleague that are here today. I understand that these slides are going to be available afterwards, so if you have any questions, then in hindsight, given that I've forgotten my business cards, it's quite handy that it's up there. So thank you for your time.